Hi there. Well, here we are at the very last section, the last unit of an Accounting 30. And what we're going to learn today is how to prepare a cost of goods manufactured statement and an income statement. So I have the sample problem open so that you can move along with me. The first thing we need to know is the name of the company, and I was quite creative in this one. It's just called Sample Company. And we're doing a cost of goods manufactured statement. And it is for, I believe it's at the bottom, it is for the current year ended December 31st. So for the year ended December 31st, 2012, I'm just going to put X's so that I can use it anytime. Alright, so what we're going to figure out here is how much our whatever we decide to manufacture is going to cost us. We're just going to say that we're manufacturing widgets just so I can use something. Okay, so the first thing that we need to know is we need to know what our direct materials cost. So those are the materials that are directly related to the building of our widget. So we start out with our raw materials, beginning inventory. And so that would be on January the 1st. And you can see from our assignment sheet over here, our beginning raw materials were 10,000. And I'm just going to kind of block them off after we've used them, just so that you can see which ones we've already used. Okay, then we're going to add any raw materials that we've purchased. And in this case, we purchased 123,700. So once again, I'm just going to highlight this to show that we've used it. That will give us the raw materials, total raw materials. So we're going to add those two. Oops, don't forget to single line. Then we're going to subtract what we have left over in raw materials, so our raw materials ending. And that is 17,200. That will give us our direct materials used. So we're going to subtract this minus that to get 116,000. And once again, I will highlight this to show that we have used that number. Okay, so the next thing that we need to know is how much was the labor to build our widgets? And if you look there, it says direct labor was 116,500. That is just a coincidence that the direct materials used and the direct labor both equal the same amount. Okay, the next thing that we need is our manufacturing overhead. So these are costs that relate to the manufacturing of our widget, but isn't considered a raw material or something that's directly related to it. So indirect labor would be one thing that is a cost, and this could be the wages for the janitorial staff. The maintenance on the factory equipment. Is 7,900. and insurance on the factory equipment. So as you can see, I'm coming up with things that are related to the factory. So any costs that relate to the factory, I'm just going to highlight those, and I'm going to put them perhaps in a different color, just so that you realize that those are the manufacturing overhead expenses. And our other one would be rent on our factory facilities, as well as indirect materials. So this indirect materials could be the glue that we use to put something together, and amortization, or which is the same as depreciation. Okay, so I still have those three to type in here. I'm going to quickly do that without making too many mistakes. 8,000 indirect materials, 7,900, and our last one, amortization, which is just like depreciation, is 3,500. We no longer have any more expenses that relate to the manufacture of our items. So that would be our total manufacturing overhead. And I'm quickly going to just add that up. Okay, so this gives us our total manufacturing costs. So we're going to add those three numbers together this time. Ooh, sorry about that. C10 to C19 should be correct, but obviously I have something incorrect here. Oh, silly me, equals sum. There we go. All right, now that's our manufacturing costs. But we have some things that are work in process. So things that were not quite done, but we need to consider that into the cost of our materials. And I will highlight that in pink. And then at the end of the year, we have work in process that we aren't quite done. And that would be 47,170. When we subtract that, this will give us the cost of our goods manufactured. $245,230. All right, and we're going to make this into currency with 2 decimal places and no dollar sign. So there you have the cost of goods manufactured statement. Oops. I am just going to, I will highlight our work in process, ending amount. Okay, so there you have it. I'm just going to pause the video for a moment, and then I will show you how to do an income statement. All right, the remaining amounts that we haven't crossed off yet are going to end up on our income statement. So once again, we have our 3-line heading, our very creative company name, Sample Company, income statement for the year ended December 31st, 2012. Okay, so just like when we did an income statement before, the revenue section is the first section on our income statement. I'm just going to quickly merge and center these. So our revenue account in this problem is called sales. And so our sales amount is $365,000. Oops. Sales. The next section is we're going to figure out how much the cost of goods that we sold from our business cost us. So the first thing that we need to know is we need to know what our finished goods beginning inventory is. So that would be the January 1st finished goods amount of $35,980. To that, we're going to add our cost of goods manufactured, which comes from our cost of goods manufactured statement. And that was the amount that we created back on sheet 1, which was $245,230. That number will give us a subtotal when we add those two numbers together. Then we're going to subtract our ending finished goods inventory. $72,650 to get our cost of goods sold. So we subtract those two amounts. To figure out how much profit we've made, we subtract our sales amount minus what the cost of goods sold was. How much did those widgets cost us to build? Oops. And I'm just going to go over and highlight our finished goods so that we realize that we've used those amounts. And I am going to put them a light gray color, I think. I think I'll just do what I just did here. I can't seem to make those gray. Okay, they're going to be pink as well. Alright, so the next thing that we need is we need to figure out what our operating expenses are. So these are the expenses of our offices. So the administrative type things and any of our sales costs like advertising, which happens to be the first one. advertising expense. So that would be the expenses that we have left over. Insurance for the office equipment, 6,000, sales salaries, rent for the office building, and amortization for the office equipment. All right, so those would be our total operating expenses. So we're going to add those up. And then we will be able to figure out our net income or our net loss. And to figure that out, we're going to take our profit and subtract our expenses. And if you have a look, you will see that our gross profit is less than our total expenses, which is why I wrote net loss. If you ended up with a positive number here, then of course it would be a net income. But I can tell from this that this is going to be a net loss. And after we've done a few last little housekeeping chores here, there you have an income statement. Let's make it into our currency. And there you go. Hopefully that'll assist you in doing the last unit of Accounting 30.